Subscribe to my channel Report Stock.
Welcome to the deep dive. We're here to sift through the noise and pull out the key takeaways from the latest reports.
That's right.
Today, we're digging into Daktronics, ticker DAKT. They just released their Q1 numbers, and there's also some outlook information to consider. Our goal really is just to make sense of it all for you, give you a clear picture of how the company's doing and maybe what's on the horizon.
Yeah, cut through the jargon.
Exactly. Okay, so let's unpack this Daktronics news.
Let's do it.
Right off the bat, the Q1 headlines looked, well, pretty good, didn't they? They reported earnings of 0.33 cents per share.
Yeah.
Which beat the estimate of $0.24 quite handily. That's, what, a 37.5% surprise? Pretty big.
That's a significant beat, yeah. And revenue looks strong, too.
Right. Revenue also came in higher, $218.97 million. The analysts were expecting something closer to $197 million.
So about an 11% beat there on revenue. Solid numbers, definitely.
Solid beats, exactly. But what's the real story here? Is it all good news?
Well, what's fascinating here, I think, is when you add a bit more context. Those beats are strong, no doubt.
Okay.
But that $1.33 earnings per share, it's actually down a bit from the $1.36 they posted the same quarter last year.
Oh, interesting. So a year-over-year dip despite the beat.
Exactly. And if you zoom out a little, look at the last, say, 4 quarters, Daktronics has only actually beaten those consensus EPS estimates once.
Just once in the last year.
Just once. And they've only beaten revenue estimates twice in that same 4-quarter period.
Huh. So this big Q1 beat is kind of standing out against a, well, more mixed background recently.
Precisely. It makes you wonder, is this a real turnaround or maybe just a particularly good quarter? An outlier, perhaps.
That's a really important perspective. And, whenever we see earnings like this, the next question is always, okay, so what happens next with the stock?
Always.
Especially since, looking year to date, Daktronics shares haven't exactly been lighting it up. They're up about, what, 3.4%?
Yeah, something like that.
Which is, quite a bit less than the S&P 500.
Yeah.
That's climbed over 10% in the same time frame. So it's underperformed.
It has, yeah. Which leads us to those forward-looking clues.
Right. What are we seeing there?
Well, a key thing we watch is how analysts revise their earnings estimates after results like these, but also before.
Okay.
Because those revisions really signal changing sentiment. And for Daktronics, the trend before this latest report was actually pretty mixed.
Mixed how? Some up, some down.
Yeah, exactly. No strong consensus moving in one direction. And that's reflected in its current Zacks rank, which is hashtag 3.
Which means hold, right?
Right. It's a quantitative rank based largely on those estimate trends, suggesting the stock's likely to perform sort of in line with the market over the next month or so, not expecting a big surge or drop, basically.
Got it. And do we have actual numbers for what analysts expect next?
We do. For the coming quarter, the consensus is looking for about $7.29 in earnings per share on $217.26 million in revenue.
Okay, so slightly down sequentially from this strong Q1, it looks like.
A little bit, yeah. And for the full fiscal year, they're penciling in $1.802 for EPS on about $814.5 million in revenue.
So the forecasts suggest maybe steady performance rather than like explosive growth continuing from Q1.
That seems to be the expectation baked in right now, yes. More steady as she goes.
Okay, so that covers the company specifics, but what about the bigger picture? Where does Daktronics fit in its industry? Does that tell us anything?
Good question. Yes, context is key. Daktronics is in the electronics miscellaneous products industry.
Right.
And the interesting thing here is that this industry group is actually doing quite well right now. It's ranked in the top 35% of all the industries that Zacks tracks.
Top 35%. That sounds pretty good.
It is. Historically, industries in the top half tend to significantly outperform those in the bottom half, like by more than double, typically.
Wow.
Okay.
So Daktronics has some decent industry tailwinds then.
It definitely seems like it. The sector itself is providing some lift, which is a positive factor for any company within it.
That industry strength is helpful context. Just to get a better feel for it, are there any bigger companies in that same space we should maybe keep an eye on? Just to gauge the overall health.
Absolutely. A good example is TD SYNNEX, ticker SNX. They're a much, much larger player in that same electronics miscellaneous products category.
Okay. TD SYNNEX?
Their report is actually due out soon, around September 25th. And the expectations there are pretty hefty, about $3 per share in earnings on revenues around $15.14 billion.
$15 billion. Wow. Yeah, that puts Daktronics' $218 million quarter into perspective.
It really does. DAKT is definitely more of a niche player. So while that strong industry trend helps everyone, the performance of a giant like TD SYNNEX can sometimes give you a clearer signal about the broad economic factors affecting the whole sector.
Right, whereas Daktronics might be more sensitive to specific project timings or things like that.
Could be, yeah, even with those favorable industry wins.
Okay, so wrapping up this deep dive on Daktronics, it feels like a bit of a mixed bag, really.
I think that's fair.
You've got this undeniably strong Q1, big beats on earnings and revenue. That's the good news. But then you set that against a history that's been, well, less consistent recently. And the outlook, including that Zach's hold rank, points towards maybe just market-level performance ahead.
Exactly. It highlights how one strong quarter doesn't automatically change the whole narrative. You need to see if they can sustain it.
So the key takeaway isn't just the beat itself.
I don't think so. I mean, the beat is notable, but perhaps the deeper insight is questioning whether this is the start of a new trend for Daktronics, breaking away from that mixed pattern, especially given the healthy industry they're in. Or is it just a blip?
A head fake, perhaps?
Could be. And that leaves a really interesting question for you, the listener, to think about. When you analyze a company, how do you balance one really impressive data point, like this quarter's beat, against the backdrop of historical performance and the forward-looking estimates that might seem more cautious? How much weight do you give that single snapshot versus the longer film? That's a core challenge, really.
Subscribe to my channel Report Stock.